Vancouver, miningweekly.com. Canada's gold majors reported fourth quarter and year 2017 financial results on Wednesday following market close, with headline earnings coming in flat or lower year-on-year, as companies work with smaller, more lined production portfolios. The exception was Goldcorp, which put in a stellar performance. Toronto-based Barrick Gold, the largest gold producer in the world by output, has reported adjusted earnings, which excludes special items for the 3 months ended December, of $253 million, or 22 cents a share, which beat analyst forecasts by a penny. The miner reported a net loss of $314 million, or 27 cents a share, compared with earnings of $425 million, or 36 cents a share, a year earlier, as Barrick booked impairment charges in the period including $429 million on the stalled Pascua-Lama project straddling the Chile-Argentina border. Revenues for the period fell 4% year-on-year to $2.23 billion, which was mainly a function of 10% fewer ounces sold at 1.37 million ounces of gold. The miner produced 1.34 million ounces of gold in the quarter, down from 1.52 million ounces recorded in the comparable period of 2016. Barrick reported cost of sales of $801 per ounce in the quarter, which was 2.2% higher year-on-year, while the World Gold Council's all-in sustaining cost (AISC) metric rose 3.3% when compared with the same period last year to $756 per ounce. Barrick expects to produce between 4.5 million and 5 million ounces of gold this year, down from year 2017 output of 5.32 million ounces of yellow metal, at an AISC ranging between $765 per ounce and $815 per ounce. The company expects to produce an average of between 4.2 million and 4.6 million ounces of gold a year between 2019 and 2022, at an AISC of $750 per ounce to $875 per ounce. Meanwhile, Vancouver-based Goldcorp reported a strong performance in the fourth quarter of 2017, reporting adjusted operating cash flows of $401 million, a 31% improvement over the year-earlier period. Net earnings more than doubled year-on-year to $242 million, or 28 cents a share, beating both the average analyst prediction of 11 cents a share, and the highest analyst estimate of 18 cents a share, according to Thomson Reuters data. Revenue for the period came in at $853 million, which was 5% lower year-on-year, as gold sales fell 18% year-on-year to 633,000 ounces of gold, and slightly below analyst estimates calling on average for revenues of $858.1 million. Gold output came in 15% lower during the fourth quarter of 2017, at 646,000 ounces. Cash costs, on a byproduct basis, fell 4% year-on-year to $462 per ounce, while AISC rose 16.5% to $870 per ounce. Goldcorp announced that its program to implement $250 million of sustainable annual efficiencies by the middle of this year is on track, with nearly $200 million achieved in 2017. Goldcorp expects to lift output to about 3 million ounces by 2021, while AISC are expected to fall by 20% to about $700 per ounce in the same timeframe. It is also aiming at growing its reserve base by 20% over the same period to 60 million ounces of gold. Kinross, AGNICO Eagle further, Toronto-based Kinross Gold reported headline earnings that fell below the bar, as it too dealt with a 13% drop in gold output. Adjusted earnings for the 3 months ended December 31 fell to $16.3 million, or 1 cent a share, falling short of average Wall Street analysts' forecasts calling for earnings of 3 cents a share, on revenues of $870.3 million. Revenues for the quarter came in at $810.3 million, a 10% year-on-year drop, as a result of selling 15% less gold at 634,762 ounces of gold. The average realized gold price in the quarter increased to $1.276 per ounces, compared with $1.217 per ounces a year earlier. Output came in at 652,710 ounces for the 3-month period, with the Bald Mountain Mine, in Nevada, doubling output. Kinross reported costs of $653 per ounce for the quarter, down more than 8% year-on-year, with the Tasiast mine in Mauritania putting in a strong performance, reducing cost of sales per ounce by about 30%. AISC per gold ounce sold on a byproduct basis increased to $1,013 in the period, compared with $1,010 in the same period of 2016. Kinross has guided for 2018 output of 2.5 million ounces of gold equivalent, down from the 2.67 million ounces produced in 2017. Production cost of sales per gold equivalent ounce is expected to be $730 per ounce, with AISC forecast to be $975 per ounce sold on both a gold equivalent and byproduct basis. Fellow Toronto-based miner Agnico Eagle also put out its financial results, reporting a 25% year-on-year drop in comparative earnings to $45.4 million, or 21 cents a share, for the fourth quarter, but still beat analyst forecasts, that on average called for earnings of 19 cents a share, on revenue of $557.08 million. Net income just about halved to $35.1 million, or 15 cents a share. Payable production in the fourth quarter of 2017 was 413,212 ounces of gold, compared with 426,433 ounces in the fourth quarter of 2016. Total cash costs for the quarter were $592 per ounce, compared with $552 per ounce in the fourth quarter of 2016. Agnico said the increase was as a result of higher mine site costs and lower production in the quarter. AISC for the quarter were $905 per ounce, compared with $832 per ounce in the fourth quarter of 2016, owing to higher total cash costs and increased sustaining capital spending. The company's payable output for the 2017 was 1.71 million ounces of gold, beating its most recent guidance of 1.68 million ounces. Gold production for this year is now forecast to be 1.53 million ounces, up from 1.5 million ounces forecast previously, while the expected startup of several new operations prompted the company to provide a midpoint guidance for 2019 output of 1.7 million ounces, compared with previous guidance of 1.6 million ounces and 2 million ounces of gold by 2020. Barrick's NYSE-listed equity gained a further 1.17% in aftermarket trading, building on a 3.25% gain earlier in the day to $13.81 a share. Goldcorp's equity shone on Wednesday, gaining 4.1% during market hours, and gaining another 4.17% in aftermarket trading, to change hands at $13.75 a share. Kinross Gold's NYSE-listed stock gained 8.65% by the closing bell on Wednesday, only to fall 5.85% in after-hours trading, to a level of $4.02 a share. Agnico Eagle's NYSE-listed equity closed the day up 3.57% at $45.49 a share.